Good.
We're just all like looking like we're about to head to a Jimmy Buffett concert, but then Dan actually looks like we're actually about to talk about investing because Dan's a little bit more professional looking.
Dan knows what that is.
What's going on, y'all? Welcome. We are live this morning. It's good to see y'all. We got some people trickling. Boys, I'm going to share our YouTube link so y'all can post if you want. For those of y'all who are trickling in this morning, we have a very special guest with us this morning. B-Win or Bradford. I found out his cool nickname is B-Win. I think that's one of the coolest nicknames that I've ever heard. So B-Win, thanks for hanging out with us, man. I appreciate it.
Yeah, I'm really happy to be here. Thanks for having me.
Bradford, so you are in Nashville, correct?
Yep.
Awesome. So yes, Bradford is aware of all the rain that we've gotten. I'm tired of it. I need sun because I think it rains more in Nashville than it does Seattle. So for those of you, again, who are tuning in, who do not know who we are and why we do this. So again, Unicorn Finders was founded when COVID hit. So we have hit our 1-year anniversary recently because Dan, Jake, and I are all good friends. And we realized that we weren't going anywhere anytime fast when COVID hit. So we were like, why don't we just hang out together once a week? And so that kind of turned into like, well, how about we just invite our network onto this? So we've done that. And then now a year later and 1,000 followers on LinkedIn and some pretty cool guests, here we are. So basically our goal is to highlight people and companies doing unicorn-like things, having a unicorn factor, as we like to say. So that is why we do this. And so without further ado, let's go ahead and dive in. I wanted to bring in on this episode, I think a company and an individual with that company who has a unicorn factor, who is doing something different, who is turning the industry upside down. And so I want to give a quick introduction about Bradford. Bradford sent it to me, and then we can kick this thing off. So Bradford brings more than 20 years of engineering experience to his role as a CTO at Alto, with his expertise across e-commerce, computational,
genomics.
Thank you.
Big words.
Thank
Big
you.
words. Yeah.
Listen. I got a 980 on my SAT. And healthcare, he has helped a number of companies elevate their platforms for growth and exit preparation, including Home Healthcare Laboratories of America, acquired by LabCorp, Change Healthcare, acquired by MDON, and Emma, acquired by Campaign Monitor. Bradford, thanks for hanging out with us, man.
Yeah, thanks again for having me.
It's quite a track record.
Yeah, it's quite a track record.
You did it.
Quite a track record. So
I'm just I'm just like a Forrest Gump. I just kind of find myself in the right spot.
Hey, listen.
So where you just keep running, or
yeah. That's what you can do.
So let's dive in. Give the people what they want, a background of Alto and what it does, and then we'll go ahead and dive in.
Yeah, so Alto's an alternative IRA, which is just a fancy way of saying instead of investing in public stock, ETFs, that sort of stuff, you can actually invest in things that or other things that you care about. So cryptocurrency, farmland, real estate, startups, cannabis, Pokemon cards, whiskey. I mean, I could keep going and going. Like anything where there's liquidity, where there's a business or even if that just means an LLC that they bought something. Artwork is another one, where they bought something and they're trying to sell that thing for a profit. You can invest your retirement dollars into that company if when they do sell whatever it is that they're selling. That return goes into your retirement account and you're not taxed on it, right? Because it's a retirement investment. And that's something that not a whole lot of people know about, especially for like crypto gains and things like that. That you can do all that and not pay a penalty until you need to take it out when it's time for you to retire.
That's crazy. So is this kind of like a Robin Hood type scenario, like basically like an everyday man?
Yeah, you don't that's probably the biggest thing is when we talk about bringing equitable access to these kinds of investments, it really is like anybody and I don't want to say like any amount of money, but we're talking if you've got $100, I think even some platforms have like a minimum of like $25 that you could put into.
That's my type of investing right there. $25. I'm good. That is me. I hate doing stuff like that. So
for like a decent bottle of bourbon, you can own a piece of a startup somewhere. But yeah, like you don't have to be an accredited investor for all the platforms that we're integrated in with, and that's really interesting. Like if you go out to like Masterworks or Republic, you can see like right when you get onto their front pages, like the things that they have that you could invest with, and people tend to think too, it's like, oh, that sounds like it's going to take a whole lot of time. It really doesn't. Like you could, if you have, and if you're a technical person or even a non-technical person that's watching this right now, you can roll over your funds from something. If they're just sitting there and you want to roll it over into an AltoIRA, signing up literally takes just a couple of minutes, and then depending on where you're pulling those funds from to roll it over to us, we have people that can help you and call people on the phone and man the fax machines, because this is an industry where people still use fax machines for some reason.
So I tried to send a fax a while back and it was a disaster.
I can see that.
Yeah.
Really?
Yeah, if anyone's listening, faxing would be a good disruptor still. HelloFax is good, but anyway, we won't talk about
that. So Bradford, I want to ask you, you're investing in a company using traditional IRA or using your IRA funds. That company goes public or that company sells, all of that money is just deposited as gains in your IRA. Is that how it all works? It's all just transactional IRA, and then that money is then available to be able to be spent however.
Put it to work on your next thing. Yeah. What's interesting is
perfect timing as gains taxes are changing.
Yeah, for sure. Like especially for people that are if you're holding crypto in if you've got like a Coinbase account, which is who we have our crypto integration with, the IRS is obviously getting more interested in who's moving out. I think it's like $20,000 in and out of those, which that's fine. I think it's just more further validation of crypto being around for a while. But yeah, you're right. I mean, if you have a startup that you invested in and they go public, you get those dollars. Well, then we have to, because we don't allow you, at least not right now, winky face, to hold public securities. So we'll actually, you can then choose to say, okay, well now I've got this public stock from that startup that is now a publicly traded company, and we'll say, okay, where do you want us to send that? Do you want us to send it to Fidelity? Do you want us to send it to whoever, right? And you can hold that in a retirement account externally until we're able to do it.
So how do you guys locate it out, aside from the Coinbase integration in crypto, which I understand is a big part? You mentioned other stuff as well. How do you guys identify what you're investing in, and am I the customer in charge of my diversification, or is that through, are you advising in that, or either, or how does that work?
So we are not a financial advisor, and none of this is financial advice, of course.
Bradford's got
disclaimer.
This is
there's some disclaimer under there.
Our general counsel is like right here, so he's like jamming away here and you say that, but yeah, like but yeah, so our big pitch, right, is to self-directed investors, which just means you're doing your own research, and making that call or no call that, okay, I'm gonna put this money of mine to work in this thing because I think that it's gonna make money and make me money. We do have different personas that come onto the platform. So we have financial advisors who manage family accounts and things like that, and they come to our platform to say, hey, I want to offer these accounts that I manage alternatives, and I want to do it through your platform. We support that as well, but they're not, they're an independent entity. They're just kind of using us as the vehicle to make those investments on their investors' behalf.
So Andrew, with the question, when you say IRA, does that mean Roth, or is this a separate non-taxable gain schedule apart from that?
So it's Roths are part of it. So you have the Alto alternative IRA, and then you have the crypto IRA, and soon those are going to become kind of one of the same.
That's crazy. So how did this idea come about, right? Like I'm fascinated because I actually found y'all through, believe it or not, shout out, it's Nash Today. It's an email newsletter, and they actually gave you a shout out. And so I immediately, I think DM'd you because it caught my attention. How did this business idea come about?
So our CEO, Eric, I forget exactly what it was that he was trying to invest in, but he was trying to make an alternative investment himself, and it took weeks for him to track down like everything they needed to do, and again, like being an entrepreneur himself, he's just kind of like, and he's worked in finance really his whole life. He was just like, sure, it's kind of like your classic, like, surely there's a better way, right? And like, so the platform started evolving out of that, and it turns out it's like, there's not a ton of innovation, right, in the retirement space, right? If you want to turn it that way, like we were talking beforehand,
it's like heavily regulated too.
Yeah,
so. But it's like you say retirement,
you gotta find the loophole.
Right. Well, no loopholes.
Jake,
like,
no loopholes.
Sorry.
You say retirement, and like everyone goes to sleep. Legal. Right? But what's interesting, right? And why technology exists, why these tools exist, is to correct a lot of that automation where it hasn't been automated, and that's why, like I was saying before, it's like you can come here, create your account like right now, and within a couple of days, like your funds will be transferring. What people tend to forget though is like there's a rule, right? When you roll your funds over, you can't begin to put them to work for 7 days. Like they have to set for 7 days, and that's, especially in this day and age, like that's a hard thing sometimes for people to come to grips with, right? We're so used to, you mentioned Robinhood before. It's like, well, I'm in and I swipe my debit card and I put in $200 and I'm buying crypto or buying something. It's, this is, it's sort of a bit slower pace, right? We're talking about long-term, like these are retirement funds. Now, the way I typically describe it is like the investing in alts, right? There's only so much artwork, like you could buy like a Banksy or something, or startups. It's like there's only so many of those, right? That's more of like a glacially paced kind of investment vehicle. And it's true too for our software systems, where it's like the complexity there is the latency or duration of those transactions. Like those could take weeks while we're waiting on like another counterparty in their bank and our bank and whoever. But then it's like you turn your focus to the other side of the room, and it's like smoke and lasers and trap music, and it's just like the crypto verse, right? And it's just like it never turns off. It's a 24/7, 365 like Le Mans race. And we see people like really actively trading out of their retirement accounts into crypto, which is cool, because I never would have expected people to do that. But when you've got a market that never shuts off,
so
you can.
What is it when it comes, like, so if I have a Coinbase account and I'm doing it the traditional way, is the plan to basically drop that Coinbase account and do everything? I mean, maybe you can't say that because Coinbase get mad, but drop that Coinbase account and then go into your Coinbase account with my IRA up to X number of dollars that I'm allowed to contribute to an IRA in a year.
Yeah, so you can't do, like, I think we call those in-kind transfers. So you can't like take Bitcoin or whatever that you have in a wallet somewhere and transfer it to us. I hesitate to say yet, but you can't do that right now. But yeah, like if you took, so let's say that you had like $6,000 worth of like Ethereum or something, and you're like, okay, I want to turn that Ethereum into cash and go fund an Alto account. Take that USD and fund your Alto account that way from a bank account or something. Then you could put it into, it's all, again, it's kind of like you have to sort of follow the path or procedure of okay, these funds exist in this IRA vehicle, and then from that vehicle they go into whatever market or investment it is that you're trying to put it into.
So a few comments here I want to catch up on. First off, Max goes, "This is the biggest unicorn. No straight up competition. E-commerce and social media in one. More profitable business model. Cool. Yeah, absolutely. That's why I asked Bradford to come on. So another question too, and we talked about this off before we went live, Bradford. But there's information is so important from Amy. Information is so important when you have the people who are coming out of generational poverty, who've put in the effort to work to gain their skills in tech. They need so much to learn the hidden rules of investing. Talk about this, but also talk about what we were talking about on air about how our generation's kind of gone through 2 recessions already and how you need to be mindful of this, and you have just money sitting around.
Yeah. This, like, it is important. And people too, like, you know, I'm 40, I turned 40 this year. But people in that,
you look great.
Oh, thank you.
Yeah.
Is it good lighting or
is someone, it's someone asking about my morning routine? Like, nobody is, but anyway,
it's talk to unicorn finders. That's what it is.
Yeah. But no, so it's, like it is important. And, I mean, that's a lot of the reason that this platform exists, right? Is that if you look at the cohort, I think you know, millennials, however you dice up that cohort of people in this country, I think they outnumber baby boomers at this point. And it's like, if you were to sort of shift things forward 25, 30 years, I can't remember the exact number, but you know, all stats are made up. But let's assume, like it's like if you were to assume like 50%, if you were to assume like, okay, let's say 50% of millennials, or even like 25% of millennials, right? When they go to be retirement age, which is still a huge population of people in this country, like they'd be in poverty. Like you don't have typically, right? People in that cohort and younger don't start putting that money away when they're 23, 24, because, you know, they're just out doing other things. You know, I've been there. You're out doing other things. You're not thinking about that. And it's like, this is just a way to say, okay, like if Pokemon cards are your thing, if whiskey's your thing,
dude, they were my thing back in the day, bro.
Yeah, I can see that. I can see that.
Man.
Yeah, but it's like find those things that you understand and like you yourself find value in, because there's you know, Pokemon's a great example. Like there's plenty of other people in this world that find value in that. It's like whatever those collectibles are, like you can put money into these accounts, right? And it doesn't have to be, you know, you don't have to dump your whole paycheck into it. Just put in like $50 or $100, like when you can, and just monitor, you know, those platforms that we're integrated in. And if something comes up that you feel passionate about, like, hey, you know, you can put your money to work. And, you know, I can't say like what, you know, the returns are going to
like an NFT. Yeah, I get it.
Yeah.
I'm putting all of my money in NFTs.
That's it. That's all I'm doing. All in.
Yeah, I bought a rendering of a house on Mars for $500,000. So, yeah.
Right.
There was an invisible statue that just sold for $18,000. Yeah, that's right.
Hey, Bradford. So Jordan asked this. So sorry if you covered this. Also, StreamYard's got to fix how big these things are, because I can't even see Dan or Jake. Sorry if you covered this, but as an asset class, I can't think of any scenario where crypto would be anything more than a small sliver of retirement portfolio, being that it's the highest risk there is. Jake, for the most part, what is the average slice of the pie people are delegating from their portfolio to crypto, and who are doing this? I don't think like Bradford can give all the answers to this, but
I mean, I can't just go one. Yeah.
Or if you can give any just thoughts on that.
Yeah, no, it certainly can. And there's people that I can say that there's people that hold like several $1 million in their IRAs that it's all in crypto. Like on our platform today. Some people, and sort of the historical, I guess the kind of like the old way of thinking about, and you're right, like there's a lot of volatility. You know, I think you said the word risk. Like there's risk in everything. There's no such thing as like a sure thing or a safe investment, right? Like last March, stock market tanked and then crypto went the other way, right? But the volatility, you're right, is extreme, and that just means, you know, high highs and low lows, and you're jumping, you know, largely in between.
Just like life, man.
Yeah, but historically, it's been like 90-10, like 90% of someone's retirement portfolio in stock, and then maybe 10% in something like real estate or something else. I think one of the more recent things, and I mean recent, like within the last year, is that like maybe you go 80-20, maybe you go 70-30.
Right.
But I think we're starting to see, right, like the more that we as a like, you know, a global economy start to figure out a lot of the technologies, and not necessarily like, you know, meme coins or whatever, but a lot of the technology that's behind running these digital assets, and how we can put those things to work to prevent things like fraud and other things. I mean, you're still in on the ground floor of this, and it really is like, you know, you think about like all the energy that we have to expend to make these systems run, and they're getting more efficient. It's kind of like, you know, the energy of walking compared to the energy of like riding a bike, versus the energy of making a car move, versus the energy of launching a rocket to space. Like the use, like energy is like the currency of evolution, like of technology, right? And so we're seeing all this energy put into this, you know, kind of revolution of this asset, right? And yeah, like there's going to be a ton of volatility, but, you know, do I think Bitcoin's going anywhere? No. That's just my opinion. Again, not financial advice. But yeah, so you are seeing people, you know,
you're the one with the 1.2 million in Coinbase.
Yeah.
No, definitely not. But yeah.
Are you Elon's cousin?
Yeah. No. But yeah, you are starting to see people get a little less risk averse with putting more into alternatives. And that not just crypto, but yeah, I mean, there's some people that, you know, they're, you know, YOLOing it, and their whole thing is in crypto, and, you know, that's
just
again,
yeeting it.
Blake right down there.
Eat it.
Yeah. So it's, you know, that's their thing. As we say here, you know, you do you. They're doing them. So
you do you.
Bradford,
I've got a one time, didn't go over well.
Yeah, I can imagine not. Bradford, I've got just probably my last question is, how do you guys determine what your offerings are? What's your due diligence process look like? I mean, obviously there's probably hundreds, if not thousands of different opportunities that somebody invest in, but you guys only offer a select amount, right? How do you guys determine that? And what's kind of the standard or your modus operandi, I guess, of adding to your portfolio of products?
Yeah, I mean, so the way it's structured now, like we're not a broker dealer, which just means like we're not like an introducing broker dealer, where, you know, we're not showing people like, hey, like, look at this real estate deal, look at this hops farm in Omaha, right? So what usually happens is, so you have these investment platforms that already exist, right, in isolation, where you could, you know, swipe your debit card and just go invest money into that thing, kind of like I was talking about before with Robinhood. So like you could go to Republic, open an account, and you know, swipe your bank card and throw $100 at it. You're gonna pay your gains on that though. With us, it's usually, you know, we have a revenue team and account team that find these platforms and say, hey, you know, if the offerings that they have qualify as something that we can, you know, enable people to use their IRA dollars to invest into, meaning that, you know, they've gone through all the SEC like regulatory things to file, you know, this thing as a deal. I can't remember the name of the form off the top of my head, sorry, but yeah, if they've done that diligence and they say, hey, we want to integrate with you, then yeah, we can do that. And you basically, you know, almost like PayPal, right? Like you'd be on Republic and say like, how do you want to pay for this? You want to use a bank transfer? Do you want to use your debit card? Or do you want to pay with your IRA? And you're like, what the hell is this? They click on it and it's like, oh yeah, I want to do it. I want to do it that way. So that's it. I mean, it's more of like, you know, relationship building with these platforms. They have their own regulatory requirements, as do we do as a you know, a custodian of these accounts. And that for those people listening, a custodian's just a glorified word. Like Fidelity as a custodian, it's just a custodian of record for what your IRA is, investing in. So,
man,
that's kind of how it works.
I tried. God, this probably was 5 years ago now. I shopped it around as much as I could when I had zero money and even less connections. And I really wanted to do something like this as an offering, but from a 401k option for a corporate benefit, where you could choose to do part of your contributions or match into a crypto bucket. I guess that was even before Coinbase was a thing, but I just did not have any of the connections or expertise. Do you have any plans to like break into the corporate side? I know that you're self-directed on a lot of things, but is there plans for this being a benefit offering for like a Vaco or like whatever, to be like, yeah, we were going to offer this somehow to our employees? Or can you even say?
I hope my smirk doesn't get everything away, but yeah, it's something we're probably looking into.
Yeah, just call it.
How more quietly I can say that. Yeah. But yeah, I mean, it's really, we haven't even, scratched the surface on, like, to give you an idea, when I started here 15 months ago. So you talked about the pandemic. I got to spend one day in our office over at Cummins Station at the Industrious place over there. I was in there for one day after I started here, and then everybody went remote, and I'm kind of like, oh, this will be interesting. So fast forward 15 months, and it's like when I started, there were 3 engineers on the team. Now I think we're at 17, and I have to get to 40 by the end of the year, like at minimum 40. So
man, it's almost like if I knew somebody in Nashville who could help. If
only, yeah. But yeah, I mean, it's really crazy. Like we just can't. Like I can't hire enough people fast enough to get to all the things that we want to get to. And yeah, like we just raised our Series A. Like we're super well funded. Coinbase
17 mil, I think, right?
Yeah. Coinbase invested in us. New York Life invested in us. Unusual Ventures. I mean, there's a lot of people that really do believe in what it is that we're doing, and like we believe here. Like this is a game changing platform, and I don't people that know me, like I don't use like that word and excited a whole lot because I think they get overblown. But yeah, like it really is a really rather incredible opportunity. It's not easy. We're probably at the hardest part, right, of what we need to do as a business like right now. But anything that's hard isn't, anything that's easy probably isn't worth doing. Like, so these are the problems of like being a disruptor in an industry that doesn't typically see a whole lot of innovation. But yeah, I mean, it's a ton of fun, and yeah, I mean, we're killing it. So
it's so cool, man. It's groundbreaking, and it also, people who have been in this industry for a while should be thankful for you guys disrupting it a little bit to actually bring some attention back to this, which is good. Let me ask you this: if I were to open an AltoIRA today, can one of my buckets be investing in AltoIRA?
That's a great question. So we actually
did, you said startups in there, so
yeah. So we actually did back in September what's called a RegCF, which is like for crowdfunding.
Yeah.
And I think the old rule for a RegCF was that you could raise $1,070,000.
$1,070,000.
Yes. Okay. I think now it's like 5 million. But anyways, so we created a RegCF offering, put it out on Republic, and yeah, so you could actually invest in Alto with your AltoIRA. It's probably one of the most meta things I've ever done. But I think that took us about a week and a half to fill it up, which is pretty cool to see. And then we have you could do that. I don't think we're doing another one of those anytime soon, but the ship has sailed. But yeah, I mean, it was pretty cool.
Taylor, you could have had him on the podcast like 7 months ago.
I know. There's a lot more money then.
Yeah, if only.
I lost all my money in Dogecoin. Bradford, I want to ask
Coinbase. I'll spill the beans there. Like Coinbase is actually adding Doge. Actually, I think it's going to go live today, probably ready for investment tomorrow. Yeah.
Well, I'm going to open
news.
my Alto account and dump it all in there and hedge my bets and lose more, right? No, Bradford, I do have a question for you. I guess Jake kind of talked about it. You were just talking about it as well. It is an industry that's it hasn't been disrupted in a long time. There's a couple companies that have probably tried, but not a lot of companies that are truly building traction like you guys seem to be doing. How do you guys build a user base? How do you convince people that for their entire lives, those that have invested to invest in your Ameriprise, your Charles Schwab and those accounts, to take this a little bit more into their own hands and use a platform like what you guys are offering?
Besides coming on Unicorn Finders.
Yeah. How do we find those people? I mean, that's the root of the question, right?
Yeah.
Sure. Yeah. How do you find them, or how do you get the message out, or what?
So it's funny. Yeah. We spent our first Google AdWord dollar, I think, about a month ago.
Holy cow.
So all of and I mean, like, again, like I'm trying to churn through kind of the gravity of why this is important.
You sent faxes, didn't you, Bradford?
No. That's that 3-letter word is a 4-letter word around here. But a lot of our growth has been organic because there is a massive appetite for alts, right? Not just crypto, but alternatives as well. And people that, if you think about self-directed investors as sort of a community, like they all talk, they all go to these, or back when we had conferences, like they would mix and mingle and talk, and it makes its way around. Like you see it like get propagated around a Reddit. It gets Twitter's been a huge source of account growth for us, which is wild considering we're not doing the advertising on there. So but yeah, I mean it's all been word of mouth, and I mean I'm not talking just like 1 or 2 accounts like a month. I mean like several thousands of accounts sometimes. Like
wow,
come aboard, and again, like it's all referrals. I mean it's really incredible. So when I say we just have like a toe out the door, like I'm not. It's kind of like when I'm explaining to people when I'm interviewing them, like I'm not looking right and left at who else does or is trying to do sort of some of the similar things that we're doing. Like I'm looking like a rung above, like how do we get to be a Fidelity size and things like that, and with our tooling, because it's like there is no one else like us in this space, and no one else is on this trajectory. Like it is unique in its own right. And yeah, there's a lot of people that believe in us, and I think investors with our platform in particular, like it is you look at our website, and yeah, there's going to be people look at it and kind of turn their nose up, but it's different for a reason. I think if you think back to like a Rocket Mortgage or somebody, how different that was, and things like that are just different. And then you fast forward 10 years and you're like, there was something to that. I think we'll do that now. I don't think it's going to be 10 years. I think it'll be in 18 months. We'll look forward and like, yeah, that was a good idea. We'll still see if I look as vibrant as I do now, but I mean it's all been word of mouth.
That's awesome.
That's awesome.
Crazy.
It's really cool.
Well, Bradford, thanks for hanging with us.
We will share it. We're fans. Yeah,
we're definitely fans.
Let's
definitely have you on here the next few months again as follow up, see what you guys are doing.
We didn't even really get to talk like super nerdy, which that's more what I was prepared
I know. That's what I'm saying.
I should have had a revenue officer in here. She would have done a better job of selling it than me.
No, we could have both of you on next time.
Yeah, definitely, absolutely.
She'd love to. I mean, really, even if you had Eric, I mean, they're
Yeah. We're in the process of like starting to follow up with all of our like 27, 28 guests we've had now. So yes, we will absolutely do another follow up, get a little bit more technical. We can keep it high as well, but let's definitely have you on again, buddy.
Yeah, sure.
Thank you
And like
so
I
much,
said,
man.
like
It's awesome.
we are hiring like a lot. So
What's your
you
tech
know,
stack?
so we're everything we've got is in AWS. We don't have our own data center. So TypeScript, React, you know, you don't have to know TypeScript exactly, but JavaScript obviously help. And then the back end, people that know me, especially around here, know what a Beam and Erlang fan I am. So we actually use like Elixir for many of our back end services. But yeah, there's some really cool. I'm a huge like Erlang fan. I have been for a very, very long time.
That's awesome.
But yeah, it's a really great fit for this system. So
That's
again,
cool.
my smirking what I can't share, but yeah, the smirk's a dead giveaway. So
I love it.
Great. I took notes of every smirk. So
Yeah, every smirk is gonna come back at you.
Hopefully no one's drinking every time I do it. So
Yeah, we would be in trouble. Well, dude, thanks for hanging, man. Boys, it was good to see y'all. Y'all have a wonderful week. Viewers, thank you again, everybody. You know, Jordan, Andrew, Blake, Pia.
Hey, Jordan wants to know where he can get one of our shirts, man. So
Amy.
you know, that makes sense.
So this will be an NFT. You can buy it.
Yeah, exactly.
Dan with the foghorn.
I'm working on a partnership to get some Unicorn Finder shirts here.
Yeah, trying to get some Unicorn Finders floral. So that's on the to-do list. All right, boys. Cool. Well, thank you again. Bradford, have a good one, man. We'll let you get back to work.
Everyone tune in next week. We've got every Thursday, 10:30 EST. Give us a shout, give us a follow, all that stuff.
I love it. Thanks y'all.
Guys. See ya.
Bye.